Start here. I should be up on YouTube. Should be on the VTF. Let me just read this disclosure. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. The camera's not on yet. Position disclosure. I covered my TQQQ entirely. I got into Apple long. I don't have too much of it. All right, let's jump into it. Let me just start by saying I have a very hard 5 o'clock Eastern time cutoff today, so I apologize about that. If I don't get to everyone's questions today, just ask it tomorrow, and we'll get to it. So getting off to a little bit of a late start, and I have to finish a little bit early. So again, I apologize about that. It's just a really crazy day over here doing some end of the year type stuff. Let's go to markets. So the S&P, hold on, let me change my screen here real quick. Bam. All right. So the S&P here is down 0.75%. The Qs are down a percentage point, and the IWM is down 0.8%. I'm disappointed by that Russell performance based on the relative strength that the IWM was trying to show in the beginning of the day. Let's take a look at the daily charts here for the indices, and then we'll look at the smaller time frame so we can see exactly what I'm talking about. Let's actually start with the daily chart of the Qs here, the NASDAQ. So we spoke about in yesterday's afternoon meeting that yesterday's close was no good for the Qs, right? Because we closed like just below support, just below the 8 and 21 EMA, and just into a gap. The expectation had to be lower prices today. And initially, even starting with the futures market last night and then into this morning, the NASDAQ was actually relatively weak to the IWM. I remember being a little bit excited last night looking at the futures, and I was like, wow, all the futures are positive here. Qs are up by a little bit, and the Russell was up like 0.5%. And then by the time I got to the office this morning, the Russell was flat, and the Qs were down about 0.5%, but it still had that kind of level of relative strength in the Russell, which is really just not something that we've seen in what feels like months. But we had that really weak close in the Qs. Apple gave a bearish Maribozu candle yesterday in extended territory, so I thought that could weigh on things a little bit. But then Apple did get upgraded. Got 2 upgrades this morning that actually had Apple being strong compared to the NASDAQ, to my surprise, earlier today. But all the same, we expected weakness from the NASDAQ today, and then the PPI number came out, and the PPI number was not good. It was really not good. It adds to the inflation story. We have the Fed announcement tomorrow, so we'll see what the Fed has to say about it. My thought process, as I've kind of made aware, is I do think that the market is already pricing in an increase in the speed of tapering and an earlier liftoff on interest rates than it was, even just a couple of months ago. And this PPI number today probably certainly doesn't help with that. But all the same, that PPI number came out. Let's go to a 5-minute chart pre-market here to look at what the market did, because this spot became really important. So 8:30 a.m. is when the number came out, and you can see here at 8:30 in my pre-market chart here the negative candlestick, negative Maribozu candlestick that came in. We just saw immediate selling, right? Immediate selling at 8:30 when that PPI came in hot, and we kind of continued to dribble lower while we were doing our morning meeting into the market open. And then when the market opened, we were gapping down pretty significantly by that point. We had a pretty big rally in the first 15 minutes of the day. And the point that I had mentioned in the morning meeting that we really had to pay attention to was the high from 8:30. Can the market get back above the high from 8:30 a.m. when that PPI number came out? If it can do that, then what's the market saying? The market's saying, you know what? We don't really care that this PPI number came out as too hot because we kind of have it priced in already that interest rates are going to be increasing faster than originally expected. And if the market can't get above that 8:30 a.m. high, then, well, it's saying that the bears are in control, right? So the high here for the Qs is 390.11. And you can see when we rallied this morning in that first 15 minutes, the high is 390.09. We held that 8:30 a.m. high by 3 cents. It's not a coincidence. SPY's actually overticked it by a little bit, I think. Let's see, the SPY high at 8:30 a.m. was 465.50, and it was able to uptick in that first 15 minutes to 465.74, so it overshot it by 24 cents. Not really kind of a big deal. But the big one was the strength in this IWM, and it got me really excited because we haven't seen any of that, right? We saw the material stocks reacting super strong early on in the day. CLF was up a couple of percent and really at highs at 10 a.m. U.S. Steel was up like 5% and really at highs at 10 a.m. STLD was having a strong performance as well, was up pretty nicely. Some of those beaten down growth type stocks, along with the IWM holding in early, were actually not breaking down, right? And that's been the unique thing that I spent a lot of time talking about in yesterday's afternoon meeting was, is it actually possible where Apple and the NASDAQ can sell off and these stocks that are down 80% or this IWM that's in correction territory can actually remain stable? And so far the answer to that has been no, across the board. If the NASDAQ is strong, then fine, the Russell can be strong sometimes also, but we have not been seeing at all a day where the Russell is able to be strong and the NASDAQ acts very poorly and kind of sells off. And this morning was super interesting, 10 a.m., look at this, the IWM's going green. And the NASDAQ is still down really solidly. Look how much of this gap did not get filled in the NASDAQ. And I was like, wow, look at that. This is something new. And I was even saying it still here, though, at 10:25 when the NASDAQ started to really roll back down. So we can see the market itself, SPYs and the Qs, peaked at 9:45. And then the NASDAQ actually made new lows at 10:15. The IWM was still making new highs at 10:20. And I was like, this is great, but I'm still worried that if this weakness in the Qs stays this way, that the IWM is eventually gonna roll over and is gonna fail as well. And that's exactly what happened. This difference here at the close is not really dramatic to me. The NASDAQ is down 0.95% right now, and the IWM is down 0.75%. So it's like, okay, big deal. The Russell was able to be stronger than the Qs by 0.2% on the first day. That's been relatively strong to the NASDAQ since who can even remember when. So that turned out to be really disappointing. We saw it for like literally 45 minutes today, and then it was kind of just back to usual with the market. And that's the biggest thing that I'm paying attention to. I said it yesterday's morning meeting, and I said it in this morning meeting. I don't have a lot of conviction right now in the market. I really don't. Yesterday morning and this morning, I didn't have a lot of conviction to come in and do heavy buying, heavy selling. We weren't really extended enough to the downside. Yeah, it was a common gap, but let's see where the relative strength comes in. I'm just waiting for more information from this market that can give me a little bit more conviction. I don't have that conviction right now. And honestly, guys, this market has just been really tough. It's just been a really tough market environment since really the second half of November. In some ways, it's been a really tough market environment since July. But we had, half of October and half of November were really good. So we had like 1 month period of time there that was really good. But for the most part, overall, this second half of the year, this back half of the year, has been really difficult. And today was kind of just the same with that. I had no real conviction on things. There were a couple of things I was paying attention to. I spoke about wanting to buy a dip in Apple. I really liked 170. Felipe was saying he wanted to start at 172.50. I kind of liked that idea, kind of starting where the ADMA was. Apple did get upgraded, so it was trying to be relatively strong pre-market. Then it kind of caught up to the NASDAQ, and then it had a pretty good bounce in the afternoon. So it's a doji here for Apple off the ADMA. Had some good execution with this thing, so it turned out to be an okay name for me today. So that's Apple. IBM was one of my preferred ideas for the day. So IBM gave a great opening drive, and then I know Felipe was trying to be involved in it into this pullback. think it pulled back a little bit more than anyone would have liked in here, and then gave this bounce, and then kind of totally failed. So that was, I mean, not totally failed, but pulled back enough to probably stop people out, and then didn't do anything for the rest of the day. So that one was kind of on the radar, even if it wasn't the easiest thing in the world. I talk about AMC as a buy today. I didn't take it, but I kind of felt you needed to get the stock pre-market. I said it in yesterday's afternoon meeting. I said it this morning too. If we can get stock in AMC at 20, I kind of like it. And pre-market was at like 20.30, 20 quarter, something like that when we were talking about it. I think it opened a little bit higher, so it was a little bit tougher to get it intraday. But actually, AMC was a decent long trade today, and somehow it's one of the most relatively strong stock that's out there. It's up 5.5%. But yeah, the key today was watching the market, watching the high from the PPI, and seeing if the market could recapture it. And the SPYs and the Qs couldn't do it. They held it as resistance. The IWM really tried to give that relative strength today for the first time and was unable to. And that's pretty much the moral of the story. And until I get a better signal from this market that can give me some more conviction, it's hard to do too much right now. I actually was really loving the first 45 minutes of the day when I was seeing that, oh my God, is it possible that Apple could actually sell off, the Qs could sell off, and some of these other stocks hold in. And then, by the afternoon, it just couldn't keep up with it. So that's pretty much all I got for today. Again, I'm trying to keep it a little bit short because my time today is a little bit limited. But I'm happy to take some time now and answer any questions that anybody has got. So I'm going to check here in the VTF and scroll up to about 4 and see what anybody's got. And if anybody's watching the YouTube stream and sees any questions coming in, if you can copy and paste them into the VTF for me, I would appreciate it because I'm not looking at the YouTube myself. See Jonathan talking about NVIDIA, so we can take a look at it. Yeah, I mean, NVIDIA was 4th day down today, right? So there was definitely the opportunity for kind of an oversold bounce type trade in this thing, a little bit of a snapback. It tried to be strong early. I actually thought the AMD was the better one this morning. Let's look at that AMD daily chart. Also 4th day down this morning, gapping down, so pretty extended to the downside. And these names were able to be pretty relatively strong. AMD closed up 1.5% on the day. NVIDIA closed up a percentage point on the day, so definitely stronger than the market, but pretty battered coming into the trading session. So it's hard to trust that this bounce can be sustained for more than a day or two at this point, while it's still below the moving averages. Maybe this AMD is able to snap back to 140, something like that, if the market's a little bit cooperative. And NVIDIA similar. Maybe this NVIDIA can retrace a little more yesterday's candle, get back up to like 295. But it's hard to really believe in either of these names right now after they've broken down for anything more than kind of a little oversold bounce type trade. I don't know where Colin went. Colin's gone. We threw him out the window. Started drinking. We're allowed to say that on the radio?
Oh, sorry. Chewing gum. He's chewing gum.
Rich saying kind words to both Josh and Colin. Next I'm seeing here from Stephen G. I noticed that I am getting scared when entering positions. I do not believe that I am size too large, but having a mental block. Okay, cool. And if you want to give any examples, we could take a look at examples in any of your execution. But yeah, part of that, Stephen, is I think the market environment. It's like I just said. I personally am struggling to have conviction on a lot of the trades that I'm really putting on, and my favorite trading opportunities are usually early on in the day, right at the open, taking advantage of that opening price action. And with how we've been trading with the indices and where we've kind of been gapping and opening, at least especially these last couple of trading sessions, it's been difficult to have conviction. So I totally understand what you're saying. One of the things I've been trying to emphasize in the last couple morning meetings is when we don't have the same level of conviction, when the market is opening up in a difficult spot, then you got to trade smaller. Trade smaller and trade less. And it's totally fine to trade less and to trade smaller so that you can be better positioned and preserve capital for when the market is having its better times. So that'd be the first thing I would say to you. The second thing I would say to you, though, is, and I know this is really hard. It's hard for me. It's hard, period. if you're putting a trade on, if you've done your research, you believe in your research, you have your execution set up, then there's nothing to be scared about. Because either the trade's going to work or the trade's not going to work. And if the trade is not going to work, you should be comfortable with the trade not working. You should be comfortable with the risk that you're putting on. It's impossible to have every single trade work. I've seen a lot of great traders. I got Scott Redler in the office sitting across from me. Even the Red Dog himself, I'm sure, would say not every single trade he presses the button on works for him. It just doesn't work that way. So you have to have conviction in the game plan that you had. You have to be comfortable with the risks that you have out, and you have to follow your risk management rules consistently. That's why I emphasize it to you guys every morning. The most important thing in this business is following your risk management and your money management rules with consistency. Because if you can do that, then you'll get through these more difficult trading periods like the one that we've been in, and you'll really be able to thrive when the money is easier again and it's much more conducive and we have a much stronger advantage. And I really think that that's what it comes down to. So, if you're struggling right now, size down a little bit, and then the biggest thing, like I always love to say, is you got to anticipate the market movements and not react to them.
Plus, no matter what, you have to take some, in order to trade, you have to take a risk. It's just a matter of limiting your risk. So those that are gun shy, they need to realize that you have to take risk at some point to put a trade on. But it's a matter of turning that risk into limited risk in order to maximize your reward.
And that's Josh back there, if you guys are able to hear him. Next here from Christian. And Steven, I hope that helps. If you have any follow-up questions on that, obviously don't hesitate to ask. Next here from Christian. This morning in IBM, I waited until it broke yesterday's high to go long. In hindsight, that seems too late. Should I have entered earlier? So the thing about the daily setup in IBM is it's really based more off of yesterday's low. And yesterday's high, I think, in this candle is not relevant. It's not a pivot point. It's not a resistance level. It wasn't an inside day yesterday. And if anything, by the time you're breaking yesterday's high, you're becoming a little bit extended again here on the daily chart. Now, there's a bunch of stuff to love about IBM today. It was in play. It was showing relative strength. I think this daily chart looks great. That's why I brought it up as the first thing for me in the morning meeting. But you did need to kind of be involved in this early. You're either getting involved in it right away and giving it space down to yesterday's low, which is a lot of risk, or you having it on your radar and you see this opening momentum come in and you go, oh, I've seen this story before, this looks perfect, and you're trying to get involved in at as good of an execution price as possible versus this opening low. So this IBM was one of my ideas of the day today. That doesn't necessarily mean it was an easy execution. I don't think it was an easy execution, because look at this first bar. Right? If you weren't watching this, if you weren't either willing to take a decent amount of risk on this or watching it from the second it opened and executing right away and having conviction, and we understand why it was difficult to have conviction today just because of where the market is, then by the time you're buying this break of yesterday's high, it's so extended on that 5-minute chart. I actually think that the better trade at that point was this candle right here. This inside 5 continuation hammer. Use this for execution. You like the big picture. It's giving the strong opening momentum. Don't buy the break of yesterday's high. Yesterday's high is irrelevant here. Look for a smaller. This is what I love to do. I can't analyze small time frame charts from today before the market opens, right? Because I don't know what they look like because the market's not open yet. So that's why we're doing in the morning meeting a lot of analysis of daily charts. But then what you have to be able to do as a trader, if IBM is your focus, you have to be able to take that analysis of the daily chart and say, okay, I'm going to be analyzing it on a 5 or 15-minute chart to be able to find my execution. And Steven, this actually goes back and maybe helps with you a little bit with your question on kind of execution and emotions in regard to entering positions. It's similar here. IBM is doing what we need it to do. The daily chart looks right. It's got good opening volume, good opening momentum. And then here's your actual execution setup. You buy the break of this inside 5 here at 9:45, the break of this bar, versus this low. And guess what? The trade eventually would have failed and rolled over, and the market was weak, and the market is against this trade. That's one of our big layers of probability. It just kind of is what it is. But this is the type of execution that you're looking for. Remember, one of my favorite things I love to look for is small time frame risk, small time frame execution for big picture reward, daily chart reward. You know, you could talk about all your risk reward ratios. I like to make 3-to-1 and 5-to-1, 10-to-1, whatever. I promise you though, if you're doing that, if you're having small time frame risk for big time frame reward, then the risk reward numbers are just going to be there naturally. So you're looking at this daily chart and you're saying, man, I think this daily chart looks really good, and maybe this thing can be working its way up to $128. If it breaks that $128, maybe we're looking at $134, back to this gap here, something like that. That's your daily chart reward. Okay, daily chart is looking good here on this big time frame as a, you know, this tail low is telling me that the next daily setup is kind of coming into play. But how do I execute that daily setup? I execute that on the smaller time frame when all the smaller time frame layers of probability are looking proper. Stock is in play. Stock has good opening volume. Stock has good relative strength. Bam, there's my 5-minute setup. Bam, I'm in. It works great. It doesn't, fine. This worked enough, I think, to be able to cover your risk, and then you get stopped out. So I hope that helps, Christian, and again, I hope that helps with you also, Stephen. Scrolling through here. Thanks, Mike. Oh, I see something else here from Steven. RIVN, Rivian, CNC. Want to go through both. 113.95 on Rivian. All right, so let's start with the daily chart because that's what I always want to do. And let's see what the daily chart here is telling us on Rivian. It's not really telling us too much, right? It's gotten pretty tight. We have kind of a broad resistance area at 120 that I talked about in yesterday's morning meeting. And support, I don't really see too much here that I can get excited about. This 110.80 maybe. Really $100 is bigger support. But I'll tell you, a stock like Rivian, I don't really like to buy low. I like to buy high. Meaning this is a momentum stock, right? It's a $100 billion market cap and it's made 50 cars. So I want to be executing this type of name when I really see the momentum coming in. I would rather, and I know this can be difficult sometimes for traders, especially if they're newer, I would rather buy at a higher price and buy at a lower price for certain types of stocks. Really, again, these momentum stocks, growth stocks, things like that. Because if I'm buying that break of 120, I know the buyers are in control. I can see that the volume is coming in. The execution is there. If I'm just buying this thing when it's on the way down, or I'm buying this thing kind of in its consolidation zone, I don't know, right? I just don't know in the same way. So the first thing I would say to you is that your Rivian price point here, 113.95, I don't find it relevant, and to me that's important. I want to see daily chart kind of relevance on that. Let's look at the 5-minute chart to see if we can get anything else on this. So 113.95. So if you're buying Rivian at 113.95, that means that you're buying it at this. The first time it gets to that price is at this 1055 bar, and honestly, it looks like you're catching a falling knife. Maybe if you were buying this on the way up through here and not on the way down, that would be better execution. But especially on these types of growth stocks and momentum stocks in this market environment where these names have just, not necessarily Rivian, but most of these names have just been getting trashed so consistently, you can't try to just bid out on the way down on these things. You want to be executing them on the way up when you're seeing some sort of capitulatory price action, something like that. And you can easily make the argument that that's what you're seeing here. You know, it just broke down really hard in the 5-minute. The volume's picking up. It gives a big tail. So if you're buying this on the way up, again, I still don't love the daily chart. I don't see daily chart confirmation here. But at least on your small time frame charts, you kind of have something you could be biting into, again, if it's on the way up. But broadly, overall, especially this time of day, I don't love it. It's not really where I would want to put my money to risk. Next, let's look at your CNC. Okay, CNC, look at this beautiful chart. I forgot to bring this up in my part of the meeting because this name is one that we talked about in the morning meeting this morning, and this was a phenomenal continuation trade today. I think we spoke about going long above yesterday's high, which is 79.32. Great looking chart. Look at this opening volume, fantastic. Let's see what it actually looks like when it breaks. Yeah, so I mean this works great. I guess you're seeing here in the VTF 79. I'd be looking at yesterday's high personally, which is like 79.32. So if you bought that, you would have to come in. You have to take about 50 cents worth of risk. It's a decent amount of risk for a $78, $79 stock, but not ridiculous really if you consider what this thing's been doing recently. And look at the momentum follow through that this thing gives. This is beautiful. This is beautiful. So I hope you caught that. If that was your game plan, we talked about it in the morning meeting, and it worked great. So I don't have anything else to say about it. That one's perfect. I love it. Next here from Sebastian. Outside of inside day patterns and clear breakouts, what else can we look for in daily charts for opening trades? So those are what you just described, those two. First of all, I think that can be more than enough. And those are two of my favorite opening drive type trades. Outside of that is going to be more pattern type trades when I like daily charts. So almost similar to what I was just talking about with the IBM before. If I like something about that daily chart and things are looking right, and I can find that small time frame pattern to actually be able to execute on, sometimes that's an opening bull flag, or in that IBM case, just that inside continuation hammer doji that came in. That's some of the stuff that I want to look for. Just gonna move on. Next here from Justin. Thoughts on this Beyond Meat? Yeah, Beyond Meat, we had spoken about in the morning meeting. I mentioned I didn't have any real conviction in it just because it's one of the most beaten up stocks. I don't like that this made a lower low yesterday, though it did get upgraded this morning, so that helps to add some sort of strength. My original idea was versus 65 because that seemed like a level. Okay. But then when it went straight through it at the open, I thought that it wouldn't work, and I stopped watching it. But then it went right back through that 65 and headed to 70 on the day. What is the best thing to do in this situation? So again, I don't love this one based on this daily chart, but it did have the upgrade. We like that. And I agree with you. 65 is the spot. It's yesterday's high. And yesterday was a little bit of a lower low, but it's a potential pivot point. Technically, you really need to be going long versus yesterday's low if you're big picture. But I understand looking at the gap fill, it's an area. I don't think you can expect 65 to hold perfectly. But the truth is, with the way that this thing is gapping, and the market being strong, it shouldn't really even get close to 65. So if it was me, I easily could see myself buying this thing at the open and getting stopped out at 65. And it just is what it is. And I don't know if I would have been able to do that rebuy. So this looks like difficult opening execution on an idea that I don't love. It still worked out really well, but you can't just look at it working out really well and say to yourself, oh, I should have been involved in it. If it doesn't give you the execution, it doesn't give you the execution. And it just kind of is what it is. Starting to run out of time. Next here from Ben. Yeah, I didn't take that TQQ trade because the risk was outside what I could have tolerated. And with the market's activity today, I hesitated and watched it go up and just told myself not to chase. Ben, that's great. There's nothing wrong with passing on trades if they don't fit your risk parameters. Don't look at the fact that it worked and beat you up. I don't know if it was you, but there was a couple people talking about trying to buy the Qs or whatever, TQQ around like 11. And this was just, if you were trying to buy this for any reason, 11, 12, 1, even 2 o'clock when it started to roll up, I don't know how you can have any conviction on that. It was one of these spots where someone asked me about it in the VTF, and I was like, yeah, you could try it versus this 5-minute low. I was like, yeah, you got a really good risk-reward and a low probability of success. So what does that make it, a B- trade? If it's a B- trade and it's outside your risk tolerance, you shouldn't take it. Mr. Steve suggesting for Steven to check out Trading in the Zone by Mark Douglas. Totally agree with that. He's recommending the audio book, but the real book is great also. from Sharir here. After 10:30, do you switch to focusing on 15-minute charts on everything, including indices? Reason I ask is that when the indices were bouncing in the late afternoon, I was late to trigger as I had on a 15-minute chart. So the 15-minute chart becomes the most important chart to me, but I look at it in conjunction with my 5. I don't give up on my 5-minute chart. And on certain days, if the market is acting very volatile, then the 5-minute chart can actually stay even more in play than the 15-minute chart later on into the day than it typically does. But very broadly, 10:30 a.m., 15 should take importance over the 5, but I'm looking at both in conjunction, always. I don't really ever look at the 15 just purely. Whenever I'm looking at the 15, even after 10:30, I'm looking at it with the 5, but recognizing that the 15 is more important. I want to see confirmation between the two. Thanks, Mark. Thanks, Mike, from Ernest. Saw my own observation of some option in SLV. Would you give some comments? Also, solar, like SunPower, ENPH, triggered alerts. Is this rotation? Yeah, so I've been staying away from gold and silver. I haven't even looked at this silver chart in a while. It looks not good. I guess there's some support at 20 or so in silver. They should be going up, right, because inflation, but they're not. Sorry to my gold bug friends that are out there. They're not. Both these charts look really sloppy to me, particularly the gold chart. I got no conviction in either. You could try to be long SLV versus 20, I guess. Had a green day today, but that's it. Solar names got rocked today because there was news out this morning that they are dealing with what's the term I'm looking for here? Supply chain issues. Solar companies are dealing with supply chain issues, and that is scary to me because I actually think that these solar names should be doing well, but it makes sense that they're not if they're having supply chain issues. SunPower got rocked. Sunrun got rocked. ENPH I didn't look at today. ENPH. Oh, I can't type. ENPH actually gave a decent looking candle here with that hammer back above $200. Whoops, I didn't mean to type that up. Oh man. Yeah, let's see where the dust settles in SunPower and Sunrun though, because they got brutally annihilated today. Brutally annihilated. This Sunrun lost some serious support levels today. But if we can get another down day or two, this thing could become extended enough where we could look for a bounce type trade. SunPower does have some support at 20. It's hard enough to have conviction in this market to begin with right now, let alone to be trying to buy these types of names right now that are breaking down. So I would stay away from it. From Tommy here, I got a question regarding trading price action. This might be a newbie question, but would you say key levels are more important than whatever candlestick is forming in a range? I had a hard time trading IWM today, but only came out with $150 of profits. I wonder what I can do to improve my trading with sizing in and lowering risk. Okay, so kind of a loaded question here. Would I say key levels are more important than whatever candlestick is forming in the range? I think they're both important. I think that one of the real keys to successful trading you should come over and give a guest hello and bring your dog with you and your piece of pizza. We got Scott Redler, who's thinking he could beat me in a push-up competition just inhaling like 7 slices of pizza and 4 cookies right now. Yeah, he's still got some big muscles though. I think Scott can still hang. Anyway, Tommy, let me go back to your question here. So what I was saying was I think that really successful trading is not just about looking at one thing in a vacuum. It's about looking at all of the things in conjunction with each other. And I know I kind of poo-poo on tape reading a lot these days, even though I like it and I'm good at it. But even that, so you're reading the level along with the candlestick that's forming, along with, if you're good at it and you're experienced enough, what the tape and the level 2 look like, and you're putting all that together, that's where probability comes from. That's where probability and risk reward really come from. And that's what's going to breed the better profitability. So I know it's a short answer to your question. I'm pressed on time, but I think it's the right answer to your question. Look at both. From Lenkov here. Steven, you got to just press the button, man. You did all the research on that trade. What was it, CNC? You did all the research on the trade. The trade was there. Everything was coming together properly. If you're doing the research, press the button, put the risk on, take the trade. And then who cares what happens after? If the risk is appropriate, it goes back to that other person's question who was like, hey, I didn't take my QQQ trade because the risk wasn't appropriate. That's a great reason to not take a trade. But if the risk is appropriate, you did the research, the setup is there, take the trade. Just press the button because you're never going to make money otherwise. You're always going to end up buying things late, and we don't want that. All right, final question here from Lenkov because then I got to go. For some of the new traders here, I hope I'm not the only one. You're not. Are you able to share one trade you made or you wanted to take as much as you are allowed by compliance? More specifically, why you look at the trade, what signal you use for the entry, what was your route, and what was your target, 1, 2, 3. I like to think I do that all day. You know, I think I'm always communicating kind of what I'm involved in. You know, I communicate as best as I can when I buy and when I sell. The only thing that holds me back a little bit sometimes is that I really don't want traders to be kind of blindly following me into trades, because some of the things that I do might not be appropriate for you. I'm working with a really big group of traders. Some of you guys have $1 million accounts and decades of trading experience. Some of you guys are just getting your career started and you have a small account. The right trade is not necessarily the right trade for everybody, right? So some of the things that I do some of the time, I try to communicate as best as I can always what I'm doing. And I do go over, you know, stuff like proper execution and things like that all the time. But I can also sometimes be a little bit hesitant on some of the things I'm doing where I'm taking a certain degree of risk or whatever it is that I know for certainty, unfortunately, other people can't take. And as much as I love you guys, when it comes to my trading, I got to do what's best for me when it comes to my trading. But I'm here to support you guys as much as I possibly can. I'm always happy to take a look at your guys' trading executions. I mean, I do throw up, you know, my trading executions into the screen here sometimes. I mean, you know, just look at, you know, it's hard for me to communicate exactly everything I'm doing, like in SoFi here as an example, on every execution dot that I have in this chart here. But, you know, I do my best to call out those big trades, like off $14, I think it was yesterday in SoFi or whatever it is, where the stop loss can be in real time as best as I can. I hope that helps. I'll continue to do it. All right, gang, I got to go. It was another tough day today. There was opportunity out there. Really disappointed with the Russell, but I shouldn't be disappointed with the Russell because the Russell, you know, it's like if you have a bad friend and the friend never shows up and you're still disappointed when that friend doesn't show up, whose fault is it, right? All right, gang. See you all tomorrow.